we're not in a mania in terms like there's not a mania out there where everybody on earth has to have Bitcoin. That was like October 2021. That was a mania. Like everybody, that's when the price went almost like hockey stick. This feels more sort of jittery, and it looks like it just feels like every time it goes up like 3,000-4,000, there's like a ceiling and it comes back down a little bit. But over time, again, it was $30,000 less than a year ago. So that's the big picture I think people miss sometimes because they stare at a screen every day.
Right.
And like they forget that it's only been 9 months since it was 30,000. Just being in the ETF, it's only 3 months. Over time, this is definitely going to be a positive catalyst. It's going to bring new investors into the market. I think the ETF and having people like Larry Fink, who is the head of BlackRock, and Fidelity, and these gigantic, massive American institutions, the asset managers, having them involved and sort of like backing it is a big deal. And again, 30 trillion is a ton of money. So if they were to apply just a 1% allocation to Bitcoin, it's going to add up pretty quickly.
BlackRock, Fidelity, and ARK Invest. These massive financial institutions are going to inject trillions of dollars into Bitcoin. That's the latest message out from senior ETF analyst Eric Balchunas. Since their successful launch, the US Bitcoin ETFs have been accumulating a record-breaking amount of Bitcoin, crossing an impressive $200 billion in total cumulative volume. BlackRock alone has already overtaken Michael Saylor and MicroStrategy in just a few short months, having accumulated over 270,000 Bitcoin worth over $18 billion. Despite Bitcoin trading flat for the last month and a lot of the hype leaving the space, Balchunas is predicting that this bull run is far from over. Bitcoin will continue to break all-time highs throughout this cycle. Balchunas reminds investors that just 9 months ago, Bitcoin was trading at $30,000. It has over doubled in less than a year. Make sure to stick around to the end of the video where Balchunas breaks down his big picture prediction for Bitcoin over the second half of 2024 and 2025. Also guys, if you enjoy finance content, consider subscribing to the channel or liking the video. It's free and you can always change your mind. Now here's Eric Balchunas as he shares his updated Bitcoin outlook for this bull cycle.
So what's interesting about this era of Bitcoin, it seems like the fourth time this thing has survived like a world war. I mean, Bitcoin is like a cockroach in terms of its ability to like come back from the dead. And that's why I respect it. It isn't going away. I think it was supposed to go away 3 times now. So I think now we're at this more mature level of like the mainstreamification of Bitcoin. So I think institutions don't need to wait for a rally. I think they're sort of like looking at everything and going, okay, it's not a currency, but 2 things. One, we don't want to kick ourselves if it goes to $1 million. I call that like future FOMO cure. And number 2, everybody's sort of awakening to the fact that the dollar has been devalued and inflation can steal your money and you get less of your actual returns. Your real returns are less than what your portfolio shows. And this could be a way to protect from that because it's, again, a store of value. So I think for those 2 reasons, even if people aren't true believers, they might be interested to allocate to it. And so I think that's pretty powerful. Even if it is not quite regulated and banks can't even really deal with it, those big institutions getting involved, BlackRock, Fidelity, et cetera, I think are really, really big moments. If everybody had just hodled, the price would do God candles because there was only buying for a couple of weeks there, big buying. Sometimes the ETFs are netting $1 billion a day. And, people are selling those. So there are people in the crypto market who I just don't think they're going to let it go high. I think there's people, like I said, there's people who are waiting to sell at different levels. And the higher it goes, the more they'll be tempted to sell. Now, I heard hedge funds are starting to short Bitcoin, and you can tell there's definitely a little tug of war in the price. The problem with shorting, in my opinion, it takes a lot of courage because you can lose more than 100%. And especially something as volatile as Bitcoin. So hopefully they have an exit strategy, but there'll always be people trying to short. But for now, from what I've seen, almost all the action is on the long side. To me, the people selling Bitcoin, and the reason there's been a sort of, pressure on the price, like it has a nice run and then it kind of goes down and it just can't take off, is because you've got a lot of leverage trading happening that is not in the ETF. You've got people who have owned Bitcoin for a long time who are cashing out. And I don't blame them. Like, you own Bitcoin, you were early, you probably want to get a house. Maybe you got married. You need cash. So I could see some continued selling pressure as the ETFs grow, just because people do want to sell still. I don't see, we're not in a mania in terms, like, there's not a mania out there where everybody on earth has to have Bitcoin. That was like October 2021. That was a mania. Like everybody, that's when the price went almost like hockey stick. This feels more sort of jittery. And it looks like, it just feels like every time it goes up like 4,000, there's like a ceiling and it comes back down a little bit. But over time, again, it was $30,000 less than a year ago. So that's the big picture I think people miss sometimes because they stare at a screen every day.
Right.
And like they forget that it's only been 9 months since it was 30,000. That said, this ETF catalyst is real. ETFs I dedicated my whole career to ETFs. They rule. They are they say as a customer, you can only get two of these three things: fast, good, cheap. Right? If it's fast and good, it's not cheap. If it's good and cheap, it's not fast. You get the idea. ETFs are all three. And this is why just being in the ETF, it's only 3 months. Over time, this is definitely going to be a positive catalyst. It's going to bring new investors into the market. ETFs are the preferred vehicle of most professional investors and especially advisors. They're fast, they're good, they're cheap, they're easy. It's like putting your band's music, on Spotify. It opens up a ton of new investors. So I think the price largely is moving off the ETFs. I've seen some days where the ETF's taking money, the price still sells off. So remember, ETFs only own 4% of Bitcoin so far. It has to be pretty huge because I've been ever since the BlackRock filing last June, Bitcoin I think was around 30,000, and since that filing, there was more and more good news, and it was sort of like a buy the rumor, and that drove the price up 60%. When they approved it, there was a little bit of a sell the news event there, but then the inflows were so strong, right off the bat they were strong, but I expected that. But then they had this really big second wind. And it's really rare, even for a hyped up new launch. Normally there's fanfare the first couple days. Then it kind of like settles into an equilibrium. And then maybe down the line, it catches fire again. Who knows? This one like caught fire like in the fourth week and went straight back up in terms of flows. And I think that helped the price kind of come back. Because in my opinion, it feels like there should have been more pullback after the sell the news. Because you go up 60% in anticipation. Normally, there's a sort of come down that's way deeper than we saw. So I think that the robustness of the ETF flows helped sustain the run up and then some. And so I do think it's very related. So there's many other people who can move the price. But I'd say it seems like half of them never trade. So the float is smaller, but still ETFs are still a minority owner, but they're the new kid in town. They're the ones that have been like the positive catalyst. So I would say for now, yeah, the ETFs are a big deal. The launch was really tremendous. It's sort of cooled down a little bit the last week, but overall, we're talking about 12 billion in net flows and 55 billion in total assets. Those are numbers that our predictions had those numbers after 12 months, not 3. So that just tells you where they are. And I thought we were one of the more optimistic teams out there. So they've kind of already reached our 12-month predictions in 2.5 months.
But when you say that ETFs have drawn new investors, who are these new investors, Eric?
Yeah, so there's 3 main types of investors. Retail, those are like do-it-yourself people who have brokerage accounts. Then there's advisors, financial advisors. They're like wealth managers. They, if you have a lot of money and you need help with like taxes and estate planning and all that, they will help you, and they'll like build your portfolio and whatnot. Those people manage $30 trillion in America. And that's where the bulk of the money is. That's the crowd this ETF is namely going after. And they love ETFs. Advisors, ETFs are their favorite vehicle to use for anything. So they're very comfortable with them. They trust them. They use BlackRock ETFs all the time. So that, to me, is the main market that would open up with the ETF for Bitcoin. Then you have institutions. This is like professional traders, hedge funds, endowments, pensions, big, gigantic asset owners. They are probably going to use the ETF, but they'll probably only use the one that's really liquid. They love liquidity. And they will. I don't think they'll use it tremendously, but they have so much money that even if if they 1% allocation, that's a ton of money. So I would see that down the line, the owners of the Bitcoin ETF are, maybe 20% retail, 60% advisors, and maybe another 20% institutional. But so advisors to me are the main market here. And again, 30 trillion is a ton of money. So if they were to apply just a 1% allocation to Bitcoin, it's going to add up pretty quickly. The reason ETFs rule isn't just because they're cheap or funds. There's something called the creation redemption process. It means that at any time, if the price is trading away from the NAV, you can just simply do a new creation or a new redemption. This is people who are market makers and authorized participants, and they can just make a risk-free profit arbitraging that. So anytime it gets out of whack, there's machines set up to just arb it. That's why the ETF net price and the NAV are always very close. GBTC is a great example of what happens when it's not an ETF and you see a wide discount or premium. So, if we have a day where Bitcoin's down 20% in a day or up 20% in a day, it's possible you might see a little extra premium or discount because there is so much pressure one way. Let me give you something that's going on that's very interesting. That is a trend and that we're looking for more and more, which is ultra low cost active. So how active died? Nobody likes active. And Vanguard came along and passive was ruled. Well, active is slowly getting cheap. And so Morgan Stanley Capital Group, these gigantic firms that sell active management, they're starting to finally break. And they're coming out with ETFs that charge less than 40 basis points for active management. And so we've been watching some of these firms, come out with these products. The other interesting one is products that use derivatives to target your outcome. You can pick the range of return you want. They use options to do this, and we call those buffers. And those are it's like structured products. So I think that issuers are getting creative and cheap. And to me, those are where a lot of the new interesting launches come from. The vanilla stuff is, passive vanilla is pretty much already taken up. And so you don't see, last year, 81% of the launches were active, believe it or not. That's a crazy number.
So there's Eric Balchunas with his latest Bitcoin prediction. Balchunas notes that interestingly, it has been only 9 months since Bitcoin dropped to a value of $30,000. Following the approval of the Bitcoin ETFs, the price of Bitcoin has spiked by over 100% and continues to rise today. Balchunas advises not to worry about short-term fluctuations as he predicts Bitcoin will soar tremendously long-term, largely thanks to the boosted institutional adoption that the Bitcoin ETFs have brought to the market. He acknowledges that powerful entities like BlackRock and Fidelity strengthen Bitcoin's image amongst traditional investors, bringing in more recognition and ultimately liquidity to the crypto space. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 60,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.